We're halfway through 2023. What's going to happen to the housing market? Are we going to see a crash later in the year? Some folks are predicting this, but there's some stats out there that show us otherwise. Market's picking back up, inventory's down, prices are going back up. Where is the market going to go? What should you do if you're on the sidelines thinking about buying? Should you buy? Should you wait? In this video, I'm going to talk about the market, where it's at today, and some things that you might want to start considering or thinking about, so that way you can best time the market yourself and figure out when is going to be the right time for you to get into the housing market. There's some folks that have been out there that are just total doom and gloom. They are just waiting for the housing market to crash. But so many of us that are in the industry, we see something completely different. And that's not to be oblivious to the potential of a market crash or maybe correction or whatever definition we want to call it. But there's so many things that are pointing in the other direction that show that the market is very competitive. The market is, I wouldn't say healthy, but there's a lot of buyers out there that are still looking to take advantage of the market right now. So Zillow just came out with their May report of 2023. And here's a couple of things that I wanted to point out to you so you can start thinking about what you need to do for your future house purchase. Even though we've all assumed that higher interest rates would cause prices to slow down, values to start eroding, that's not the case. In May of 2023, values went up another 1.4% month over month here in the United States. Now, again, we're going to talk generalities here across the country. Every single market is going to be different as far as appreciation, price slowdowns, or any sort of market conditions. So again, take this with a grain of salt. This is from Zillow's report. We're talking about as a country, what they are seeing. The typical home value in May of 2023 was $346,856, which is 3.4% above the recent low in January of 2023. Now, if you've been watching my channel for a while, we were talking about that if you were thinking about buying, you should have tried to get into something towards the end of 2022, because we were saying that's when the bottom of the market potentially could have been, or at least some of the things that we were seeing was a ton of seller credits. And a lot of sellers were willing to negotiate on their sales price of the house. So you could have lowballed them, asked for some credits, and you still might have gotten a deal done. Fast forward today, 5-6 months later, we're starting to see a lot of that get taken off the table. I've had clients today that were literally writing offers and were going above the asking price of the house. And a lot of our clients today are paying their own closing costs just to make the offer a lot more competitive. In fact, here's a recent video from a listing agent that texted me at her listing to show me the amount of people that were in front of her house ready to make an offer on the property. So check it out. I've had other clients that have been writing offers all across the country with multiple offer situations. We had a client in Florida. There were 60 offers on a house. There was another client in Vegas, 30 offers on a house. We've had clients in Texas, 10, 15 offers on a house. The market's not slowing down. There's so much competition out there again. It's just crazy. And to think that interest rates have been climbing back up again, and we're seeing things in the 7.5% range. And if the Fed continues to raise rates towards the end of the year, are we going to potentially see an 8% interest rate? I've said that last year. There were some of you that hated on me for talking about that, but I still think if things get worse, which according to Jerome Powell's last speech, I think things are going to get worse before they get better, we could definitely see interest rates climb higher in the mortgage space. But what are your thoughts? I want to know what you think. Comment below. Let me know where you think mortgage rates are going to head and why you think that. I'd love to hear from you. Now, here's the biggest culprit of all of this housing problem that we're all having is the amount of inventory on the market. And again, according to Zillow's report here, there were 23% fewer new listings in May, which is a huge problem because as we're in this second quarter of the year, typically the spring buying season, things start to pick up. More people want to sell their houses, they want to move, their kids get out of school, they want to get into a new school district. This is the time where a lot of people decide to sell and buy. But with fewer homes on the market, will we ever see a boom for the spring housing market like we typically do? I don't know. If there's less homes on the market and still a decent amount of buyers, that's going to drive prices back up, which again, we're starting to see that. Multiple offers, people are willing to pay above what the asking price is on a house. If we start to see some of that again, is that then building up a real estate bubble? A lot of people said that during COVID, that was a bubble, but values continue to rise and rise and rise. In fact, we've saw values increase just insanely over the last several years, double-digit years of appreciation over and over and over again. But interest rates did not deter the market whatsoever. It slowed us down a bit in 2022, but it looks like things are picking back up again. And you can see here on the Zillow report, the amount of new listings that have hit the market is a lot lower than the last several years. You can see here on this chart that the black line in 2023, our numbers are a lot lower. And then you can see the year over year comparison, we're down 22.8%. Not a lot of homes on the market. Again, there's just no way for these builders or anybody else to put enough homes on the market in order to sustain all the demand that's out there. I think the last report that I saw was that we're short almost 4 million homes across the entire country in order to satisfy the demand. But then you look at all the increased labor costs, supplies, everything is getting more and more expensive these days, that now what is going to be an affordable home for someone to move in? A lot of these homes that we're seeing across the country are still in the $400,000+ range. In fact, the median right here that we just talked about as far as values go, you're talking $346,000. Not many people are still able to afford that home price. So how much lower do prices need to go for the average family to be able to purchase a home? It's going to get a lot tougher, especially if interest rates continue to rise and borrowing costs make it tougher for clients to get into houses. That's why it's been very scary to think about where the housing market could be 5, 10, 20 years from now. Because if things don't slow down, or maybe, you know what if the market we're in right now is the new normal? I've been starting to ask myself that question, and even a lot of clients that decided that they wanted to wait on the sidelines to buy a house. I said, well, usually when you're waiting for two things. You're waiting for prices to come down or interest rates to come down for the most part. But I've been asking our clients, what if that doesn't happen? What if this is the new normal? What if 346,000 is the new normal? Or in certain parts of the country, like here in Vegas, our sales price is almost $450,000. What if that's the new normal? What if 7.5% interest rates is the new normal for the next several years? What do? Do you try to buy? Do you rent? What's going to be the game plan? And I think depending on your situation, you have to figure out for yourself, how much pain are you willing to tolerate? And the pain is going to be, are you continuing to rent, paying someone else's mortgage? Are you going to let your landlord increase the rent $500 on you and you're going to stay there? Are you going to find ways to eliminate your bad debt? Maybe pick up a side hustle. Find ways to create more income, more revenue for yourself, so that way you can start eliminating that bad debt, or maybe saving up more money so that way you can put yourself in a better position. And that may take a year, 2, 3 years, whatever that time frame may be for you, depending on how disciplined you're going to be. But is that something that you have to put at the forefront right now with the way things are? And buying a house may not be for everybody right now. And as someone that's in the mortgage industry, I believe in home ownership. And I really think that many people out there are underserved in the ability to buy houses. But with the way things are right now, it's just so crazy to me to continuously see more and more people look for $500,000, $600,000, $7,000 homes, when we were so accustomed to seeing $200,000, $300,000 loans back in the day. And now, and so many buyers out there are almost starting their search at $500,000, $600,000. So either there's this complete disconnect with reality as far as the houses that they might be looking at online. And don't get me wrong, I love to look at beautiful houses online, but I don't think I'd ever walk into a real estate office and say, hey, can you show me that $10 million house? But I still hear buyers that are like, hey, I want to buy my first house that I'm paying $700,000, and they barely have any money saved, or their credit's bad. There's so many things that are holding a lot of people back that I think that you really have to understand and get your situation dialed in first. If it's your credit, fix your credit. Stop pretending that your credit doesn't suck. If it sucks, fix it. If you need to pay off some debt, pay off some debt. Stop ignoring the collections and all the other things that are on there, because those are the things that are holding you back. There's still a ton of first-time homebuyer grant programs that are out there. All the veterans can utilize their VA eligibility to purchase. If you're buying in rural parts of the country, there's USDA financing. So there's these 100% programs, or 3% down programs that you can utilize, so that way you can get your foot in the door. So have a plan as to how you're going to attack this problem, because right now it doesn't seem like it's slowing down. So when will it slow down? What's going to cause it to slow down? I don't know what that's going to be. In fact, it's almost puzzling to really think about it, because even if the Fed continues to push for their 2% inflation rate, and let's say they need unemployment to go up another several points, that means more and more people lose their job. That means more and more homeowners will lose their jobs. Now, what's the bank going to do with the mortgage? I don't think they're going to make the same mistake that they did in 2007 and 8. I don't think banks are just just going to let homes foreclose. I think they're going to do forbearance plans. They're going to do modifications. You remember the big 40-year modification that came out with FHA? Everyone thought it was going to be a 40-year purchase loan, but it was for modifications. So all of these things are happening or have happened in the past. And again, I've said this on my channel. If there was one event that proved that the banks are not as dumb as everyone think that they are, was COVID. They had the opportunity to foreclose on people. They had the opportunity to kick people out of their houses, but what did they do? They offered a forbearance. They let people stay in their homes 3 months, 6 months, a year and not make their mortgage payment. It almost reminded me of the short sale days where people were in their houses for years without making mortgage payments, and then they sold their house and then they moved on and bought another property. I don't think the banks are going to make that mistake again. And I may be wrong. Maybe the unemployment could skyrocket. Maybe they'll just say, screw it, let's just foreclose on these people. Let's take the houses back and let's put them on the market. But I really don't see that happening. And I think that's gonna be the one driver that will continue to keep prices where they're at. Because if you don't have an excess amount of inventory that hits the market, how will prices start to decline? And I can tell you in the markets that I'm licensed in, which we're licensed in 20 states, a lot of our clients are going against multiple offers, or the listing agents are very, very short with us. They're almost to the point of give me your highest and best, I don't even want to talk to you kind of attitude again. And I'm hearing even the builders. One of my buddies went out to a new home tract the other day. He said that there was a bunch of land that the builder had, but they were just releasing 4 homes at a time. And they weren't offering many concessions or credits to the buyer. It was very basic for them to get into a house. So if you're starting to see the builders play this game again, what does that tell you? That's what they did during COVID. They weren't even paying commissions to real estate agents because they knew buyers were just willing to walk into their house and they were going to buy anything and everything that they had because interest rates are at 2 and 3%. So I don't see how the market crashes. Let me know what you think, because this is something that I've been talking to a lot of other real estate agents about all over the country, reading some articles and just trying to figure out, where are we actually headed? Are we going to see a crash? Is this the new normal? What's really going to happen, so that way we can help you guys make the best decision for yourself. And you can see here in this article from Reuters that the Fed wants to cool the housing market. But how are they going to do that? They don't even have an answer on how they can slow the market down. The one thing that they can do, the one and only thing, was raise interest rates. And we saw interest rates go from 3 to 6. Now we're in the 7% range, but that still is not necessarily slowing down the market. It's making it harder for a lot of people to buy houses, but because there's not a lot of inventory available, it's still a very competitive situation. You can even see here in this article that they show there's a record low of number of homes for sale. They're even going back past 1985. This is the lowest that we've seen in over 20 plus years. So again, the whole supply and demand problem to me outweighs everything else that a lot of people talk about, because until that gets fixed, you're still gonna have demand out there to buy. And I even think if rates went to 8% and 9%, would it freak everybody out? Abso-damn-lutely it would. But you're still gonna have people that need to buy houses. I've had friends that were in homes that the landlord wants to sell their property, so they had to kick the tenants out. In fact, my grandma's dealing with that right now. Her landlord wants to move back into her place because guess what? Living costs are going up. So if you own a property that has no mortgage or very, very low payment, why would you continue to pay rent somewhere else or live in a property somewhere else making a payment when I could sell the property, make some money, and consolidate my living expenses so that way I can ride out this storm that we're all in right now? In fact, my videographer had a friend too. Her friend just got kicked out of her place because the landlord wants to move back in. So all of these situations are going to cause people to find other places to live, whether it's renting or buying. I don't think a rise in interest rates is going to cause the market to go completely dead. You're still going to see people that will look to buy houses no matter what. It's just going to be tougher to qualify for. The pool will definitely shrink as far as the eligible people that can buy, but there still will be people that will be buying houses. So the market's in a weird place right now, in my opinion. Could it crash? I don't necessarily see a crash happening, but unless there's maybe something out there that I'm completely missing or some sort of fundamental that we're not even taking into consideration right now could potentially happen, then probably. Because guess what? You never know these days. The world we live in is a crazy place. There's a lot of things that a lot of us have probably said we never saw happen, and things have happened. So could it potentially happen? Let's just leave a small percentage for that. But then what if the market doesn't crash? What if this is our new normal? What if 7% rates is the new normal? What if we go to 8%? What if home prices continue to go up? How are we going to attack that? I think the best way to go about attacking that is to get a game plan together, whether you need a budget, whether you need to figure out your pre-approval, or whether you need to talk to a financial advisor about getting your finances in place. I think you have to take all the precautions right now to get your ducks in a row so you can make the right decision for you and your family, because not everyone's situation is going to be the same. So be very careful about the people you take advice from, whether it's your friends, family, social media, wherever. I think you have to dial in your own plan first. If you don't know where to start, or you need some references or people to chat with, I can definitely connect you with our network of advisors, accountants, anybody in the financial world that has helped our clients, credit repair, anything. We can connect you with people. That's why we do these videos, because I want to give you the most amount of resources possible. That way you can make the right decision for yourself, and that's what we're here for. So if you have any questions, don't forget, you can always send me an email, book a call with me, share these videos with your friends. I appreciate the love. I'll see you on the next one.